We made it to another Friday, which means it is finally time for the weekly wrap-up. Welcome to the Comstock channel. My name is Breann Hendrickson. Today I have Eric with us. Welcome.
Yeah, thanks for having me, Breann.
Thanks for
How are
being
you doing
on.
today besides not feeling great?
I'm actually enjoying this weather. We're 65 today, so I will
Oh,
take this.
wow.
Yeah, we
Yeah.
kind of cooling off a little bit. um,
Well, we were about 40 this morning, and I don't know that we've made it to 50 this afternoon here in Northwest Iowa. A little bit of spit and rain and about 30-mile-an-hour flatline winds. So
mm,
it's making harvest a little interesting for guys here the last few days.
they just cannot catch a break. Um,
Yeah. Well, we had a nice little start, and things were dry and moving pretty fast, and then caught a rain, and then the temperatures drop, and yeah, it's been interesting. So
Well, as you kind of said, I do not sound great, so I'm just going to kind of let you roll with how this week kind of went.
starting out the week, we were a little concerned. Week over week over week, we've had lower soybean trade. We've been struggling against resistance in corn. So starting out this week, it was a question of how our traders going to prepare for next week, which next Thursday on October 12th, we have the crop production and WASDE report coming out from the USDA. So how are traders going to treat that? Where do they want to be positioned? You've got funds, very short corn and Chicago wheat. And so there are sizable positions that could be liquidated there. If they trigger some significant short covering, then we could see some strength in the market. So that starts out the week, and we really didn't do anything. We test resistance in the corn, we test resistance in the corn, we do it over again. Finally, yesterday we had some impressive weekly export sales in corn, which should have been somewhat expected. We had some daily flash sales to Mexico leading into that. That reporting finally came through on the weekly report yesterday. So that combined with some strength in the wheat market, actually, due to Ukrainian headlines, gave a push enough for corn to get above that resistance level for the first time, which also sent us above the 50-day moving average. So we're clearing some chart hurdles and getting the numbers up towards $5. Good and bad, because you get to $5, now you've got selling resistance that you're fighting, especially here where this early harvested corn is catching a premium because of basis levels being elevated for a while yet. So I'm hearing a lot of stories here regionally of 20 to 30 over the December board. Well, obviously it doesn't take a math wizard to know that if you hit $5, you're selling 520, 530 corn. And guys are willing to do that right now because they know they're making money at that. They can sell it right out of the field. They don't have to handle it twice. They don't have to dry it down in many cases. So it's a very seamless, very fast harvest. And one of the things I think that kind of traders and market participants lose sight of a little bit is when you have a dry crop, it moves immediately. So the corn gets sold, the corn gets moved. It goes to its final destination immediately. It doesn't get stored for drying. It doesn't get handled twice. They just move it. And all this early corn is getting moved right away. And it's been very, very brisk pace so far. Now, like I said, we did run into some weather issues and stuff. And so we're going to see a little hiccup here, it looks like. But for the most part, I think the bulk of the growing region is going to be okay. They've got a good crop to deal with, and they've got good conditions to deal with as well. But moving forward for the corn, we're going to see focus remain on Brazilian weather. Mississippi River levels are still going to catch headlines. The bears are going to hang their hat on that. And harvest pressure could fight us a little bit as we see the heart of the belt shift from soybeans to corn harvest. So that's another thing to keep in consideration. But we did have a higher weekly close, and actually we were quite a bit higher. And so finally, we have something that looks decent on the corn chart that we can hang our hat on to start next week. Again, hinging on other markets as well.
How did soybean do?
So soybeans, I call it the curse of Breann at this point. I think every report you've done on soybeans has been lower. This week, lower again. It wasn't as bad. So we're 40 cents lower 2 weeks ago. We're 20 cents lower last week. This week, we're about another dime lower. So maybe next week will be steady. I don't know. This is getting a little old. We know we have tight stocks of soybeans, but harvest is it's taken center stage. I mean, harvest pressure is on. There's no doubt. that pressure is outweighing what people know to be tight ending stocks. And especially when you've got Brazil in the heart of planting season and they're moving quite well, they'll be on pace with their planting. But one of the things that Matthew has highlighted in his Brazilian updates and when he talks to people down there, they're planting even though they don't yet have the moisture. So you can put the seed in the ground. You can put the seed in the ground whenever you want. It's not going to do anything until it has some moisture to work with. So it's a matter of how far delayed are they going to be by the time they do catch that moisture and benefit some from that. So it's still a waiting game there. But all of that has kept the soybeans under pressure. I do think we're going to be past the peak of harvest by next week. And so that would coincide pretty well with a seasonal time frame of making a low by the middle of the month. We have the report on Thursday. Maybe we see a surprise there that helps things out, maybe trigger some higher trade that way. I think there's a lot of traders hesitant to step into the market because it has fallen so far. Some guys have taken some bruises here, and they're going to step back and look at this and go, well, I want to make sure before I step in. So we're going to have to see some serious confirmation before that market catches much sustainable upward momentum.
Let's switch over to livestock. We'll start with cattle.
What I feared came through this week. That little breather that we saw last week in the cattle turned into a full-on correction. We did see higher trade today, but finished the week lower. All feeders, all fats. I was looking at some feeder cattle contracts that lost $13 in 2 weeks. It's pretty significant numbers when you look at it like that. And those are deferred. I'm talking next spring feeders, March, April, May timeframe next year. So now what are we going to do here? We know fundamentals haven't changed. Significant heifer retention hasn't begun yet. That'll be the beginning of the end of the rally is when heifer retention starts. So this isn't to say that this is the end of the rally. Maybe we've seen our high posted already. I made the argument a while back that $2 April fat cattle was going to be significant. And we got to like 199.92 or something like that. Close enough to $2 that we attracted a lot of selling there. And that's ultimately what initiated this whole thing. And then seasonally, with regards to feeders, you're at this place where farmer feeders are focused on farming, not on feeding. And they certainly don't want to bring in ball and calves or issues they got to straighten out or anything like that. So they're going to focus on farming. We're going to see less buyers in the barns. Less buyers means less numbers. And so we've seen that. We've seen about an $8 decline in feeder cattle cash based on an 800-pound steer over the last week and a half or so. So, there's some anticipated weakness there, but this did do a little chart damage, and we saw until today, box beef was showing every sign that we were going to go lower yet. And then today, all of a sudden, a surprise, midday box beef was reported higher in the choice, over $4 higher, and shot us right back up to $300. So we'll have to see how that plays out for another couple of days before we know if maybe we've seen a bottom there or are we going to continue to slide lower. But the overall economic feel here, I think, is what's plaguing the crude market. We had lower gasoline demand, so we had higher gasoline stocks. And then box beef continuing to slide lower. I think you're seeing cuts of extravagance, right? Not as much travel, not as much high-end meals. Student loans are going to start coming due for those who haven't paid them in the last 3 years, and I see you smiling. This is a different era, right? And there's a lot of concern, and where are we going to go from here? And looming government shutdown, and so there's a lot of things, a lot of balls in the air. Nobody really knows where they're going to fall, and fear stokes contraction, and we're seeing that contraction in a couple of markets, and I think the beef market's one of those.
Let's try hogs.
Try it, yeah. They actually, the hog market started out the week lower, sharply lower, and recovered all of that loss by the close today. So the first 3 days of the week were lower. Monday, Tuesday, Wednesday were down. It looks nasty. We get to multi-month lows, and in some key contracts, I'm not saying every contract, but several key contracts get to multi-month lows. And then in 2 days, we rebound $5 a hundredweight. So that's a significant bounce off of significant support. And to counteract what I just said about beef and cattle, hogs are a value product. pork is a value product. Consumers can eat a lot more pork per dollar than they can beef. So in the time of contraction, you're going to see pork win. I believe David Cruz calls it recession meat. So it will win when economic times are a little tough. And, you're comparing $2 chops to $12 steaks or whatever. It's a no-brainer. And so it is a value protein. It will win when there is economic concern. All those things still are true today. And that's what we're seeing. Cash trade's been a little bit funny this week, though. There were super light numbers all week long, Monday through Thursday. And then today on Friday, all of a sudden, we have a big run of negotiated cash trade. So I don't know if we've got packers in a situation where they had ample captive supply, so they didn't really care about the open market the first 4 days of the week. And now they're reevaluating numbers and maybe they're a little light. So it'll be interesting to see how the cash market opens up next week and how the hogs actually trade and see where that leads us by midweek next week.
Overall, how do you think the week went?
It was, I guess, a bit encouraging in the grains, a bit discouraging for the cattle bulls, but they knew it was coming. The cattle market's been up for 11 months until October of 23. So since November of 22, you've just been moving higher. They knew the correction was coming. Hopefully they were prepared for it. And so you've got kind of a mixed bag here. Now, in the case of the corn, I think the general sentiment is we've seen our low. We're 30 cents above where we made a low a few weeks ago. So I think it's safe to say that we've at least seen our harvest low, barring some big surprise in the next 30 days. The beans are surprising people, but everything is kind of a very patiently awaiting confirmation attitude. Have we seen the bottom in the beans? We hit significant support on Tuesday in the beans. It's 1256 3/4 was our low tick. We had support at 1257. That's close enough. So that was important. And so was that enough? We'll find out. We're not very far away from that now. Even though we finished a week lower, we are off of that support level. So we'll see. Corn, it's like, okay, we have a few steps forward and then a few steps back. So if we can hold the top end of where we finished the week here, then we're going to be okay. And that, to me, hinges a lot on the wheat market. So if you get some intensification reports of war tensions from the Black Sea, then you may get the support in the wheat that it takes to carry the corn onto the next level. If we can get past $5, then we open the market up for a 25 to 35 cent rally from there. So we'll be looking for that next week, and fingers crossed, hopefully we'll get a shot at it.
All right, that'll do it for this episode. Have a great weekend.
Thanks, Breann. Have a good one.
For premium content, you can head over to the Comstock Report. Don't forget, hit that subscribe button.